Hey guys, welcome back to my YouTube channel. So today's video is going to be about why you should stay away, or you shouldn't start with, not stay away, you shouldn't start with Forex trading and start with equities rather than Forex to begin with. Because I think a lot of people try to sell you the dream that for some reason Forex will make you millions, when that's not necessarily the case. You can make millions through equities as well. Again, I'll explain in another video how you can actually generate a substantial amount of income from trading. But it's none of those ways of what other people like in social media advertising, like signals and stuff. That's all complete bullshit, and you shouldn't believe those. I'll make a video on that as well separately. But to begin with, I just want to make you understand why everyone tries to pitch Forex trading over anything else. And the reason being is because that's 24 hours. So people claim that you could come after work and just trade on the Forex market and make money, when that's not entirely true. But the reason why I say you should start with equities, because that will force you to sort of understand fundamentals of economies and companies. You know, you shouldn't be looking at price anyway before you trade. You should be looking at the balance sheet, the income statement, analyzing the stock, and analyzing the market conditions or whether or not it's a buying opportunity or not. And equities is better because, in my opinion, it's just relatable to you as well. You might be investing in some brands that you actually shop at. So that could be a good idea for you to come home and read the income statement, balance sheet, and sort of see, oh, okay, this is what the company X, Y, and Z does that I always shop at, and this is how they make money. And oh, I went during the Christmas period, and it was really, busier than normal. So that's obviously a good sign for this for the company. So that's why it's more relatable in being able to understand exactly the underlying asset in this case. That being said, doesn't mean you shouldn't be trading Forex and you can't make money from Forex. Of course you can, but you shouldn't allow yourself to sell that dream, because in Forex what happened over the last decade is the liquidity has increased rapidly. And for those of you that watched my last video would know that liquidity is a bad thing. Well, high amounts of liquidity is a bad thing for traders, because then that prevents big price movements. Because if you think about it, if you've got infinite number of buyers as you do sellers, then for every buyer there's a seller. That will not allow you to get a jolt in the price. Whereas if liquidity is low and someone's trying to buy get a really large order, that will obviously jack up the price. But that being said, the only times that pretty much I get into Forex personally, obviously you could do it more than I do, I'm more of an equities guy, is when economies or countries are failing or defaulting on their loans or wherever it may be. So we had that case with the South African rand and the US dollar. At that period where the US was obviously having good strong GDP numbers, and South Africa was in in a bad state in terms of their economy. And a good way to sort of see that is when big companies in that country are actually defaulting or going bankrupt. So that's a good way of sort of judging that, oh wow, the economy is having problems too. So that's what happened with the South African rand, and another one that we had most recently as well was the Turkish lira. Obviously Trump ended up having a little bit of a battle, if you will, with Erdogan, the president of Turkey, and obviously that reflected heavily into the US dollar and the Turkish lira. It pretty much doubled from 2016. Again, when you're taking a USD and Turkish lira contract, then you're technically long the dollar, and you're technically short the lira simultaneously. So you have to make sure that you understand that aspect of it as well. But yeah, so if you're understanding economics fundamentally and looking at countries that are about to default on laws or having a problem, then of course it's a good idea to get into Forex trading and just hold it on until that plays out. Same thing happened with the Argentinian peso as well. So those are the reasons why I say, okay, those periods I like to usually get into Forex, otherwise I really don't like to, because there's so much news sometimes that hits throughout the day when you might be at work that you will not hear, and that will affect the price movements. And another reason why people say Forex is because brokers give you so much more leverage on Forex. But to be fair, you don't need to, and you shouldn't be using that leverage either. I'll make a video on that as well, about explaining the leverage limits that you should take to protect yourself, because now after the new FCA regulation, you've seen a lot of brokers have to announce how many retail investors go broke pretty much trading. So if you look at even just IG Group, one of the leading providers for CFD trading, it says, oh, where has it gone? It basically says on their website 70%, 76% of retail investors lose their money when they open an account. So they have to by law now state that. So you want to make sure you're not one of them. So I'll explain how you can do that through making sure your leverage is not going out of control. Um, but yeah, so to go back to the point, so that's why Forex trading is advertised so much. But rather than focusing on that, I think you should always first start your focus on equities, because you could allow yourself to spend time and research outside of your work hours, and then based on that create an investment or a trading position. Just to also explain the difference, a trade is something between, anything from a couple of minutes, so i.e. 0 days to 6 months. Anytime you start crossing 6 months, you're pretty much investing in that stock, which is fine, but just make sure you know your time horizon as well, because it's a good idea to know if you're buying something as investment, because if you're buying something for the longevity that you think can triple in value, if it goes up 20% in 6 months, maybe you wouldn't want to consider selling that, but then that's up to you. But yeah, this is why I wanted to make this video, because obviously everyone just advertises and sells off Forex trading, Forex trading, Forex trading, when really the money, in my opinion, is to be made, especially right now in the equity market, because we've had a massive drawdown in most UK and US. UK is in a bit of a shithole, to be honest, but US stocks, we're having a bit of a climb back. But we've had a massive drawdown, so it's a good time to potentially buy into some US stocks. Again, this is not investment advice. You should seek financial counsel, but you know you should always start, in my opinion, equities. Learn there, understand the nitty-gritty of companies, and then invest. Because when you do that, then you start understanding the economies as well, in which case then you can start taking Forex bets. So that's the better way to play, rather than just going Forex, leveraging up to the max and then just blowing up. So don't do that. Don't blow up. I've been there. I've done it. Not blown up in terms of my whole, well, pretty much I did blow up in my account, but I only put the money that I could afford to lose, so it didn't really affect my life that much. But I've been there, done that, so I want to make sure that people don't get sucked into it. And I'm not a big fan of social media or anything, so I never got influenced by them, but I know a lot of youngsters nowadays are. So just make sure you realize the difference between real content and fake content, which is why I'm here to try to change that. So when you listen to me, hear me talk on YouTube, you can see the difference in between the way I'm explaining things and the way they just tell you things, because explaining is what it makes people realize that, oh wow, this person is legit or not. So, and plus I'm not giving any buying or selling advice either, so I'm just sort of giving you news and rundown and giving more knowledge of the market, which, to be fair, I believe they should teach you even in uni, but they don't really teach you that. Even in maths, financial maths courses, you do understanding the mathematical stuff behind it. So in options trading, sort of understanding the Greeks. I could make a video on that as well if you're interested. You can leave that in the comments. But the idea is they don't teach you how to analyze companies properly and sort of go nitty gritty. So we could do that together here, and hopefully that will help you traject your career as well, if you're somebody looking to get in, or if you're someone who's just doing it on their own at home. But yeah, thank you for watching, and I'll see you guys in the next video.